So do not assume that your 18-year-old child is going to figure it out. Please make sure you guide them and you educate them and you help them make smart decisions, because these decisions will impact their lives for many years to come.
You have to assume that this is your loan. If you're going to co-sign it, then don't co-sign any payment that you can't also afford.
But if you do co-sign a loan with your child and they miss a payment, your credit is absolutely impacted and on the line.
Bad credit habits impacted me far longer than I ever thought that they would.
Hello, welcome back.
Hello, good to see you.
Good to see you, darling. A few days in a row. How lucky are we?
We've been spending a lot of time actually in physical
Like
spaces together.
IRL, which doesn't
Yeah.
happen very often.
Yeah.
So fun. Welcome back, everybody, to Living Richly with Curo. We are so happy to have you if it is your first time, or to welcome you back if you are an OG listener. My name is Anne McCabe. I am the CEO and a partner here at Curo Private Wealth, and I'm joined, as always, by my lovely, amazing partner, Atricia.
Aw, so kind. Hi, viewers and listeners. I'm Atricia Roberts, COO and partner here at Curo Private Wealth. Thanks so much for either coming back or checking us out for the first time.
Yes. And our mission here at Curo, in everything we do every day with our clients, but also on the podcast, is to educate, inform, inspire, sometimes entertain you all on your financial journeys. So today's topic was actually inspired by the same question that came in from multiple clients. So anytime that happens, Teresa and
Mhm.
I's little podcast radars go up, and we think, oh, if this is a common question, this would probably be a good episode topic. On that note, also, the way we get episode topics is with your questions. So if you have a question that you would like for us to answer or talk about on a future episode, you can send those into podcast@curoprivatewealth.com. And if we pick your question and answer it, we will send you an Amazon gift card as a thank you. So, before we get into our topic of how to help your adult children build credit, we are going to do a quick A-team catch up. So, you start, Atricia. I'm sure we're probably both going to talk about the same thing.
I was gonna say we probably both have the same catch up today, but
Yep, we do.
uh, recently, both Ann and I guess I would say, had the privilege of attending a forum in Capitol Hill Day with an advocacy group, Financial Services Institute, that we, along with Kestra Financial Services, are members of. And this group advocates our elected officials on issues that directly impact our industry. So, yesterday, Ann and I, now oddly enough, we work for the same firm, but are in different states. So we were on different
I know.
schedules.
We had to separate. So sad.
But we joined groups of other advisors in our states to actually have meetings with congressmen about the issues impacting our industry. Now, most of those meetings were with either a staffer, legislative assistant, but it was still such an interesting experience to feel like you were in the inner workings of government. I've lived in the DC metro area for 10 years now. And of course, I've been on tours of the Capitol, right? You've been to the Capitol building and done a tour. But to actually be in these offices, meeting with staffers and having them listen and engage you, it was such an amazing experience to me. I left like, do I want a career in politics?
Wait, what? That was not disclosed.
Right.
The answer
But
is
not
no. You don't want to be
right.
with those.
No,
You do not want to be doing that full
absolutely
time.
not. Absolutely not. But no, it was an interesting experience, an interesting day, obviously, to
Yeah.
be on Capitol Hill. I mean, for those of you who are keeping up, there's a lot happening right now.
Yes.
But it was a very good experience. So thank you to FSI for hosting us, training us, getting us ready, and supporting us through the day. But it was a really, I thought, really interesting experience.
Yeah. I agree 100%. It was such a unique experience, so different from how you and I normally spend our
Mhm.
days. It pushed me outside of my comfort zone, which
Oh,
is always a good thing. But I've been doing this as an advisor for almost 2 decades now. It's been a while since I was really stretched outside my comfort zone. And so it was really good. As you know, I was like very nervous going into
yes.
those meetings, but once we did the first one, we kind of, got into a rhythm, and a few of us had some stories that we knew we could
Mhm.
share that were relevant to the bills or the policies we were talking about. From there it became much easier and just much more of a conversation. And I think the thing that I was grateful for too is, when you think about lobbying, obviously, the massive financial firms out there have lots of dollars to put behind lobbying, but we were advocating on behalf of independent financial advisors that, don't have as much of a voice and don't have as many lobbying dollars as, the big firms do. And my experience, and you can tell me if you had a different one, but my experience was the aides and the legislative assistants with whom we met were actually very interested to hear from us, to hear about the issues that are important to us, and also to understand how they impact our day to day, because they are responsible for dealing with and knowing, at least at a surface level, about so many different issues. And what was also interesting to me was how many people were going around these offices. They had matching t-shirts or they were wearing pins. And I'm like, oh my gosh, there are so many people. And these offices are just rotating people through every 15 minutes in meetings all day long. And so I do believe that it was helpful for them to be able to hear, in some cases, unintended consequences of policies that they have either passed or that have been passed. So it was just an incredible experience to feel like your voice is heard, to feel like, also to feel the responsibility of representing our colleagues and our peers across the country that are also independent advisors on some really important issues. So it was incredible. And the training was awesome. I mean, they really made it very easy for us to go in with, some pretty solid talking points. And then we just had to kind of fill in real
Right.
life stories. So
Yeah. No, I
it
agree.
was,
That was my experience. Everyone we met with felt incredibly engaged. They asked us questions. You really felt like they wanted to know and understand, which I appreciated. And I was just commenting to Anne before we started how tired I was. And I think my group did 7 meetings yesterday between, 9:30 and 3. But I think about those aides and staffers, to your point, they're in these meetings listening to people on a range of topics all day long, day in and day out, like the work that they do, and especially many of them are young people, right? These are not old 40s, 50s, 60s. These are 20s, right out of college, but they're incredibly bright, incredibly smart. But to think that they're handling that load of kind of hearing everybody's gripes, right?
oh
Every
my gosh.
all
Yeah.
day long, day in and day out. Like my hat goes off to them. It's incredible work they're doing.
Yeah. Yeah, and just massive amounts of hustle and bustle. I mean, the
Yes.
day we were there, Republicans are working on the big beautiful bill, and I mean, the House passed it just last night. I know we're always, a week ahead with recording, but there was just so much energy, so much activity,
Yes.
so
So
much
much
hustle and
happening.
bustle. Yeah. So it was also just an incredible time to be
Mhm.
on the Hill with all of that going on too.
Yeah.
So
Very, very interesting, very interesting. I am glad we did it.
me too. Me too.
Yeah.
Really glad we did it. So all right. Well, with our A team catch up, it's not frequent that we have the same thing to catch everybody up on. So that's cool. But let's move on to our topic of the day, which is helping your adult children build credit. So, as I mentioned at the top of the episode, we have gotten a few questions from different clients. These clients do have children that are about to graduate high school. So think about 18 and they're about to go to college. And so it's very reasonable that they are thinking about how to help their kids really get prepared and start to build credit. So, we want to break down a couple of things for you. Number one, we'll talk about why credit is important. That may be obvious, but we'll just remind you why it is incredibly important for all of us to build credit and have a good credit score. And then we'll talk about some specific ways, if you are interested in doing this, that you can help your adult children build credit. So, Atricia, you want to kick us off and just remind everyone, why do we care? Why is
Right.
credit important?
Why does it matter? So your credit history, along with a credit score, has an impact on a variety of different things that your adult children may attempt to do or have in their lives. It'll impact renting an apartment. Many apartment managing offices will run a credit check. They want to see credit history. They want to see responsible behavior with credit before leasing an apartment to a renter. Also, of course, which may be obvious, getting a car loan, right? Many young people are looking to buy cars for the first time once they graduate from college and start their careers. So, strong credit history will impact them being able to hopefully get a better loan when financing things like cars. Also, qualifying for a mortgage, same reason, right? Better, stronger credit history always makes borrowing those dollars cheaper. So that could impact their ability to buy a house. And then sometimes job opportunities. There are some industries, some companies that also want to run a credit history before employing you. They want to make sure that you handle, money well and that you're a responsible borrower and user. So those kind of things are always impacted or could be impacted by credit history. And it is just really a form of adult currency, and teaching kids how to use it wisely is super important in our lives because, as I think I may have shared in our money journey
Yep.
episode, bad credit habits impacted me far longer than I ever thought that they would. So decisions
Yeah.
that I made around credit cards when I was 18 followed me for a very long time. So just learning or teaching your children very early on how to be responsible with credit will help them throughout their lives, hopefully better than in my case where it harmed me throughout certain segments of my life.
Yeah. Yeah, absolutely. Yeah, go check out that episode on our money journeys if you are interested in hearing more about that. I think that was for our 50th episode that we did that
Yep.
money journey episode. So, here are some ways, if you are interested, that you can help your young adult children start to build credit. The first is you can add them as what's called an authorized user on one of your credit cards. So, for them to go out and get their own credit card, typically they have to be 18 and they also have to have a regular stream of income. So, if you're thinking about a recent high school graduate or an upcoming high school graduate, or in my case, with my 13-year-old goalie, he is not 18 and he also doesn't have a steady stream of income. And so I recently added him as an authorized user on my American Express account, and he now has his own card. He was actually going away on a school field trip down to Florida. And so, he has Apple Cash and things like that, but I wanted him to also have access to a credit card just in case he needed it. But the cool thing is, he is getting this card at age 13. And my understanding of the way it works with American Express is once he turns 18, they will submit all of the credit history, even though I was the one making the payments and, managing the overall credit card. They will submit the history on his credit. So when he is 18, he will have a pretty long history at that point of credit, which should set him up in a really good way. The one thing I would say, and he and I had a very clear conversation about this prior to me handing over the card, was you got to set boundaries, right?
Mhm.
You have to have some rules associated with the credit card. So it is very important to set the rules. When can they use it? When can they not use it? Do they have to ask for permission before they use it? So just make sure before you hand over this credit card that you have that conversation, you set those boundaries, because you are responsible. Let me repeat, you are responsible for any transaction that your teenage child decides to conduct. So just be very, very careful, very clear. I do believe you can set credit limits, which is a great idea, so that there is also some sort of structure and boundary, but just make sure that you're having that conversation about how to be responsible with this credit card.
Yeah, double click on that because I was actually going to say the exact same thing. On any authorized user, you can set a limit for them so that they don't have access to your full credit line. And I think it's probably a good way to set a boundary. And
Yeah.
don't tell your 13-year-old what your actual full credit line is. That's probably not a great idea.
No. They don't need to know that.
They don't need to know that. Okay. Another tip that we're offering to help is to encourage them to open either a student or starter credit card. So many banks offer starter cards that have much lower spending limits on the card. And this can help young adults establish their own sort of credit behavior and credit history without allowing them to go into too much damage because of the lower limit. But I do think it is important that you start helping your young adults understand how credit cards work. I think a lot of adults, if I'm honest, probably don't understand it. People who've been using credit cards, how you avoid paying interest, paying things off before statement billing cycle closes, which could be different from the calendar month. So, familiarizing them with that process and teaching them to pay the balance at each statement cycle to avoid interest is a really good way to start training that behavior on lower limit credit cards.
All right, number 3, if for whatever reason you don't wanna do the starter card or they don't qualify for a starter card, number 3 is to consider what's called a secured credit card. So, what happens in a secured credit card is they put a deposit down, so you basically are or they are tying up their money, and it can be low increments of dollars, but then what happens is with the credit card that they are issued, they borrow against that deposit. So, from the bank or financial institution's perspective, this is somebody who doesn't have credit and is therefore high risk. But if they are putting a deposit and securing the loan, the bank is going to be more likely to offer them credit. And that does build credit in the same way as if they were to get an unsecured credit card. So there are lots of sites online that you can check out to see what cards are available, both with the one Atricia mentioned, which is a starter card, as well as the secured credit card. NerdWallet is a great site for all things kind of credit and credit card. And they, I believe, on a monthly basis, list kind of the top starter credit cards as well as secured credit cards. So make sure to check those out and you can see what the different rules are and application process and interest rates, etc.
So, our fourth tip for helping your young adults understand credit is to also help them understand how their credit score is affected and impacted and the different factors that go into it. So, you want to walk them through the five components of a credit score. Now, the largest factor in a credit score is payment history. So, this means making payments on time, every time. And I tell people, while I am not a big proponent of just making the minimum payment, it's better to make the minimum payment on time than to make a late payment. So this is about 35% of the overall weighting on the credit score. So you want to make sure payments are made on time. The second is credit utilization, or how much you owe versus how much you're allowed to spend, if you think about it that way. So if a credit line is $10,000 and you've spent $2,000 on that line, you have a 20% credit utilization. So the target is to be around 30% or under. You don't ever really want to have a balance that's the full length of your credit line. So try to target a 30% or less utilization of any credit card account. Length of credit history is also about a 15% impact on the score. Now, this will be challenging, of course, for young adults because it will take them time to build up this part. But methods like Ann offered with what she's doing with Goalie also help set them on that path a little bit earlier so that now, when they're actually young adults, they do have a length of credit history to help improve their credit scores. Credit mix is also another factor, about 10% weighting on the score. So these are the different types of loans a borrower has. a credit card versus a mortgage versus an auto loan. So a different mix of credit also impacts the score. And then credit inquiries, or how many times you allow a lender to access or look into your credit. Now, there are distinctions between what we call soft inquiries and hard inquiries. So we're talking about the hard pulls, like if somebody says to you a hard credit pull, and that's usually when you're applying for some sort of a loan. So when you're going to apply for a mortgage or apply for an auto loan, they will do a hard inquiry, and too many inquiries negatively impacts the score. So you want to make sure that you limit those as much as possible. So if you are shopping around for a car, you may not want every car dealership you go into running a hard pull or a hard inquiry of your credit history.
Yeah. I do believe when that is the case, if you're applying for the same kind of line, that the credit bureaus will understand that, that it's not like you're trying to get a car loan over here and a credit card over here and a mortgage over here all at the same time. I do think that they realize that you're just kind of shopping around. But yeah, be very careful about, they don't want to see you trying to get a lot of credit in a short amount
Right.
of time, because that makes them very nervous.
Yeah, it's also why mortgage lenders will tell you, please do not go get a credit card or buy a car while we're in the home buying process.
Yes, definitely. Yeah, they hate that when
Yes.
somebody gets something, like, in the middle of the process before closing, because they always run your credit right before
Yep.
closing, and that can cause a large pickle in the situation. Okay, so what would we suggest you avoid when we're talking about helping your young adult children build credit? We generally recommend against co-signing a loan or a credit card with your young adult child. We realize this is tempting. In some cases, it may have to happen, and that's a decision that you can make. But if you do co-sign a loan with your child and they miss a payment, your credit is absolutely impacted and on the line. And as we have talked about, having a really strong credit score is super important. And missing payments also, even just one, very much negatively impacts your credit score, and it stays on there for many years. So we know it's tempting, but we generally suggest against that. Second, if you know your child struggles with money management, and you know who those kids are, and in some families one kid is great with money and the other spends it before it even, hits his or her hands. Let's start in that situation with some basic financial education. Maybe we talk about cash flow management, budgeting, saving before you get them a credit card. Because if they are already struggling with money management without a credit card, we believe that issuing a credit card or introducing a credit card to the situation is going to potentially make it even worse. So let's make sure we focus on those fundamental, foundational financial education pieces before we talk about getting a credit card. And then third, remember Atricia and Mai's experience with, getting some free pizza and a free t-shirt at college in college to get our first credit cards. Don't assume that your kids are going to figure this out. As Atricia mentioned, it's complicated for even adults to understand and manage credit. So do not assume that your 18-year-old child is going to figure it out. Please make sure you guide them and you educate them and you help them make smart decisions, because these decisions will impact their lives for many years to come. So do not assume that they have it figured out, because they don't.
Yeah, they have no clue.
Yeah.
Even if they're smart, bright children,
Yep.
they don't know. One thing I will go back to Anne's point about avoiding co-signing loans for your young adult children. When I was on the banking side, one of the things that I would always reiterate to parents when they wanted to do it is that you have to assume that this is your loan. If you're going to co-sign it, then don't co-sign any a payment that you can't also afford. And what I would recommend typically is that they made the payment and then had the student or the young adult child pay them back. Like, so
Mm,
you set up an arrangement where they pay you the money, but you are ensuring that the payment is made on time every month. Again,
mhm.
because that is going to impact your credit significantly if that student or young adult misses that payment. And as Ann just said, half the time we don't know what we're doing when we're 18, 19, 20 years old. So caution against it, We advise against it, but if you ever get in a situation where you have to, consider maybe that arrangement where you take control of the actual payment to the bank and then allow the young adult to pay you on some sort of a timely schedule.
Yeah, that's such a great tip. Love that. All right. Well, it is time for our closing thought of the day. We hope
And I
all of
think you
this.
should go first today.
Oh,
You always
really?
make me go first. Yes.
Oh, okay. All right. So my closing thought actually kind of goes back to something that I shared about the Capitol Hill Day, which was just a reminder of how important it is for us to push ourselves outside of our comfort zone. There is a, possibly cliche, but I think very accurate saying that no growth occurs inside of our comfort zone. Growth only occurs outside. And so I would just encourage all of us to think about when was the last time you were pushed or challenged outside of your comfort zone. And if it's been a while, I challenge you over the next week to find a way to get out of your comfort zone, even momentarily, because that's where all the growth and progress occurs.
Absolutely. That's a really great point because, again, you mentioned we've been advisors for a long time and we do a lot of work preparing for our client meetings, but very rarely do they feel like a stretch, right? Of anything
Yeah.
sort of beyond our experience or knowledge base. But preparing for those meetings yesterday, I was like, oh my God, I got to do my homework. Like, I've got to understand these bills. And
Yeah.
so, yeah, it
Yeah.
definitely was a stretch. But to your point, I feel better for it. So,
Yeah.
thank you for sharing that thought.
Yeah. Absolutely.
Okay, so my closing thought is maybe just a little bit more emotional. I won't be emotional on the call, but the month of May is always a little bit of a challenging time for me just because of Mother's Day. And I mentioned on the pod that my sister and I lost our parents pretty young or early on, along with, my dad's birthday and the day my mother passed. So May can always be a tough time. But a few weeks ago, I had the honor of attending a celebration of life ceremony for one of our clients who unfortunately passed away earlier this year, but his wife was gracious enough to allow me to come. And he was an educator, and one of his students, he taught at Stone Ridge, which is an all girls school here in the area. But one of his students actually did the, I guess, quote unquote, eulogy for this ceremony. And I was greatly impacted by it. I went on and on about it to our client, and she actually got the transcript from the student to share it with me. So there is a portion of this that I want to read, and I will just say her first name, but thank you, Jordan, so much for what you shared. But the client who passed away, he taught young adult women. He also had two daughters. And what she shared in this message was that when you let girls learn, they understand what they deserve. When you let girls learn, they don't need anyone to swoop in and save them. When you let girls learn, they learn to rescue themselves. When you let girls learn, when their father dies, their hope does not die with him. When you let girls learn, things read become things lived. When you let girls learn, dreams referred become dreams realized. And it was so absolutely touching to me and thinking about the impact of dads just in the lives of their daughters and how much, even if it's not your father, but just the strong male influences of your life, how much they impact you and encourage you and build you up. But I basically have plans to like print that in some way to use it as art in my house. It's such a powerful reminder to me. And I was so moved by it. So I wanted to share it here because I just think it's an incredible message and it helped me feel better in some of kind of the emotional times I've been experiencing recently. So that's
Mm.
my mushy emotional moment for the day. No more,
Woo! My goodness. Beautiful.
I promise. Yeah, she was
And
she was absolutely
incredible.
amazing. She was absolutely amazing. The message was spot on. Absolutely spot on.
Yeah. I mean, just also incredible the
Yeah.
timing of that
Yeah.
particular eulogy speech in
Yeah.
your life and just in this month, just incredible. So
Yeah.
please forward the transcript to me.
Oh yeah,
I want to
absolutely.
read the whole thing. Whew, thank you for sharing. That's yeah, beautiful. So all right, friends. Well, that wraps us for another week of Living Richly with Curo. Thank you so much for tuning in. Give us the likes, the reviews. Let us know what you enjoyed, what you learned, what you may implement. Also, tag us on Instagram. We love hearing from you on Instagram. We're at Curo Private Wealth. And until next Friday,
Live rich.
thanks again for tuning in. If you enjoyed today's episode, please be sure to subscribe and share it with someone who might benefit from it. Friendly reminder that this is for informational purposes only. For additional information, please visit us at www.curoprivatewealth.com. Until next time.